Good morning. This is Bruce at Fleet Capital Management. It is March 26th, 2022, Saturday morning. Just want to give you an update as to what I'm seeing technically. I'm getting really good feedback that people like this. If you do, of course, let me know. If you don't, let me know if it's a waste of time for you. And if there's anything in particular you want me to show you, please let me know that as well. So I do these for you. I've decided I'm going to do them for now every Saturday since the market's been so crazy, but we'll see what the future holds. So I have a chart here of the SPY or S&P 500. This is a daily chart, so each bar is one day. And what I've done is, I just changed it. Let's go back to here. Okay. It's still not working. Bear with me 1 second here. Okay, so now what you're seeing is that bar is a week ago Friday. And just to remind you, I had seen this channel developing and I said we either are going to break to the top or break to the bottom, but we have to break one way. We broke to the top, which was not surprising since it looked like we had formed a bottom for the current market right here. So our analysis suggested we should probably break to the top. We did. We went right up to this trend line resistance. Remember, the tick to the right is the close of the day. The tick to the left is the open of the day. We went right to that trend line, which can act as resistance, and closed. The next day, I suggested that we could come down off of that trend line, which we did. We opened lower, but then we just blasted through that trend line and blasted through the next trend line. And what I had said on the close that day is I wouldn't be surprised if the next day we went a little bit lower, which we did. We opened lower, we gapped lower, and then we broke through this support resistance line and closed. So this is last Friday. So let's see what happened, because again, as chartists, we live on the right edge of the chart. We don't know what the next day is going to bring. It's always a mystery. So we have to look for as many clues as possible to try to give us some direction. And what I felt was, since we broke through that resistance, it now could become support. So and I wouldn't be surprised. So let's see what happened. The next day, the market did drop, but you can see it opened and closed pretty much the same. This is called a doji, and that means a day of indecision. The market went down, the market went up, but the market basically closed right where it opened. Day of indecision, that's okay. But the point is, and the critical thing is, this line, which is now hopefully acting as support on the bottom. Support is like a floor, resistance is like a ceiling. It did not break and close. It matters where it closed below that support. So that was very healthy. The next day, the market shot up. You can see it opened here, went all the way up to this next level of resistance, almost touched it and then closed just off resistance. So now what we're seeing is this would be Monday, Tuesday. I wouldn't be surprised to see the market come down and test support. What you want to see is it comes down and then it bounces off. That shows pretty good strength. Let's see what that next day did. It's exactly what it did. We gapped down at the open. We traded almost down to support and we stopped. So we've got Monday, Tuesday, Wednesday, Thursday. I want to see this support hold and head back up. Let's see what happens. It's exactly what it did. And it stopped again at resistance. Remember, resistance acts like a ceiling, and many times it takes a couple of times punching through to get through that ceiling. The other interesting thing that happened on that day, you can see it says go here, is the bar turned from amber, which is neutral, we call these go fish bars, to teal, which is weak uptrend, and it gave us a new go signal. We did test that resistance. This is the second time. So either we're going to have a trading range in here, or we're going to go through that resistance. So let's see what happened. We went right through resistance and closed. So that's Friday. That's this past Friday, yesterday. Let me just double check. Yep. So now here we are. This is Friday, and we stayed teal. So we're in the beginning of a new bull trend based on this technical analysis system. And what could we expect next week? Well, I would expect prices to come down and retest this, which was resistance. Now it needs to be support. And we could be in for a little bit of a trading range in here. The goal, obviously, price-wise, is to break through this resistance, test it, and then we're off to the races. Then we're in a new bull market. Right now, this is a weak bull market. And I can show you on another chart layout that I use. This is the same thing. It's the S&P. Here are those support resistance lines. Here are those trend lines I showed you. But now I've added green is the 20-day moving average. Gold is the 50-day. Red is 200-day. A couple things I see from this layout. One, we've broken through the 200-day and tested it as it's acting as support, and we've gone through it. Very healthy, very healthy. These bars, the color on this system is, again, we're in kind of a bullish phase. And what it's looking at is momentum, which is this down here. But what I don't like is our volume has been falling. Our volume is below the purple line, which is the 50-day moving average of volume. And what that says to me is institutional volume is not supporting these higher highs. So I think based on that, we could have a bit of a pullback coming. I wouldn't be surprised at all to see that next week. But remember, that pullback is part of an upward trending market. Now, you may have noticed in your accounts that I have started shuffling some securities, and let me show you the why of that. Again, we're looking for clues. So this is a market timing setup that I have, and what this is doing is it's looking at extremely short term, then intermediate term, and then full on long-term bull market. Primary wave is the shortest signal that this system has. The system is called VectorVest. And what you'll see is we've got a primary wave up right here, and that call was really strong. But as you can see, we could have primary way up and then down and then up. I mean, when you have a really short-term technical system like this one is, it's called whipsaw. It just moves. So what we look for is if I get a primary up, and the next one is called MTI, which is the market timing indicator. If that goes above 1, this flat line is 1. You can see we're just peeking our head. Then, so again, we have a primary up and an MTI up, which is kind of the intermediate term. Then what I do is I start buying defined outcome ETFs, and I can show you that. This is my little, for me, cheat sheet that I've created. Risk level 1 is the most conservative. Risk level 2 is more of a growth-oriented portfolio. Risk level 3, which I really don't have anyone in, says I just want to mirror the market with just trend change stops. So, which I think is okay, but I think number 2 is probably better. But in any event, going back to here, let's look for timing. So market trend for defined outcome ETFs. I want to have an up on the primary, up on the secondary, which is the MTI. We have both of those, and go, no go chart neutral. So what did we have? Because this happened last week. We had primary up, MTI went up, just stuck its nose above the 1 line. So we had those. And instead of having go, no go as neutral, remember this color is neutral bars, we actually have a weak uptrend bar. So that's even better. So what I've done is for both groups, group 1 and group 2, I have started rearranging the portfolio, adding these defined outcome ETFs, different series that I have here. I don't need to go into that. And because we're not in a full bull market yet, and clearly not, but we're in something that's starting to look stronger, I'll start to allocate these defined outcome ETFs. Why do I do these rather than the SPY and the Qs? Because these have downside protection. And given that we're not in a full uptrend, if we're wrong by a week or 2 weeks or a month or even 2 months, and this thing starts to come back down to this area, we're fine with the defined outcome ETFs, because remember, we are protected from loss to between 9 and 15%. So that's what I did. Now, next step, going back to some of my market timing. This is now in a bull phase. Strong bull phase is blue. Weak bull phase is teal. So I want to see us break through this. That's something that I want to see happen. That will then show me we're in a stronger trend. Let me show you another area. And still, we're just looking at the S&P 500 for a second. Here's the S&P 500. And again, there's those support resistance lines. But I still want to see this 20-day above the 50 and ultimately above the 200. Because remember, in a healthy bull trend, we got the 20 above the 50, above the 200. We don't have that yet. That's why I'm not all in. I'm going in, but I'm not all in. When these things start to change, and I'll show you one other thing. Oops, sorry. Here we go. When we get to the third signal that I use on this, remember we had primary, which is really short term, MTI, which is kind of a medium term. We're sticking our head above. We have short and intermediate. But we don't have what's called a confirmed uptrend. We're actually still in a confirmed downtrend. It's the slowest moving indicator that I use. We want to see the buy-sell ratio come back over 1. We're getting really close, but we're not there yet. We want to see the RT, which is called relative timing, above 1. When those are above the 0 line or above 1, and the primary is up, and that's up, the MTI is up, then what happens is we go into a new phase, and the new phase is market trend for stocks and ETFs, not defined outcome ETFs. But the ETFs like the Qs, the SPY, VIG, which is dividends, MGC, all of those things, pure stock investments. Once that level of a trend happens, and we're not there yet, you see I show a GNG, go no go is bullish, confirmed up, confirmed with the primary up, then we're going to start adding the more aggressive securities to the different portfolios. I just want you to know that's coming. We're not there yet. We still have, with all that good news, I don't want you to only hear good news. With all of that good news, we still have a war in Ukraine. We still don't know what Putin is going to do. I mean, the man is obviously insane, and we don't know how much further he's going to push this. We still have very strong inflation, which I do think will dissipate. I'm not as worried about inflation. We do have rising interest rates, which are healthy. I'm not really worried about them now because no matter what the Fed does this year, we're still going to be in a relatively low, very low interest rate environment. But we do have some headwinds. And so, again, remember that uptrends don't mean it's up every day. It means that we've got higher highs, which you can see here, and we have higher lows, which you can see here. But we also could have a pullback. If you remember Fibonacci retracements, which I don't have on this chart, but very easy to put on, we could have a pullback to about 50% of this gain before we move into higher territory. So this is a downtrend, but we had this big uptrend. Down, up, down, up, down. What is this? This is an up, but it is looking healthier. So until we break this resistance level, and then we have what we call blue skies, we're not all the way there yet, but we're getting close. I like what I'm seeing, and we'll just have to let the market tell us what it wants to do next. We're just not there yet. Since I'm here, I will tell you, because I know a number of you own some of these stocks with me, NVIDIA is looking fantastic. NVIDIA, look at the 20-day above the 200-day, almost above the 50-day. I mean, this is looking really good and really strong. We had a huge up day. I think that was up like 9% on that day. And look at the volume. We call these towers. Huge. That means institutions were putting this thing back into their portfolios, like mutual funds. So I like what I'm seeing there. If I go over to the go, no-go system, and I look at NVIDIA, We are in a go, and we've got blue bars. Blue bars are actually the strongest bars, and we have blue up here, which means above average volume. So NVIDIA is looking really, really good. We were down big time on NVIDIA. We're not down so much on NVIDIA now. It's not going to take long for NVIDIA to get back into the black and start making some money for us. Same thing with Microsoft. I think Microsoft is getting close. Let me pull up Microsoft. Not as strong as NVIDIA. You can see it's hanging out here around the support line. But we do have positive momentum. That's good. We do have a go signal. We're at a light positive. Let's see if we can test this and then start to move up. We'll get a much stronger chart. So I don't want to take too much more of your time. It's been 16 minutes, almost 17 minutes. But I do want you to know you saw a lot of activity in accounts last week, and now you know why. And that will continue if the market continues to get strong. But remember, we're going to have some type of a pullback. We always do. That's not a bad thing. Let me go back to the S&P. We might have a pullback back down to the 4,400 level and then start to go back up. So that's why I'm in the defined outcome. And soon, once this gets a little healthier, and we're not there yet, but we're close, we'll start going into more pure growth investments. And also, once we get into that pure growth phase, we will be fully invested. Your portfolios will be 95% invested, which is really the target of where we're going to go. We want to drift between 95 and 100% invested. So I hope that helped. Once again, if you would like to see any other type of analysis, longer term, shorter term, different stocks, all you got to do is shoot me an email. I'm more than happy to do that for you. And that's it. So hopefully we'll have another good week next week, but only time will tell. Talk to you soon. Have a great weekend.